On Tuesday, the 25th of August, silver is trading near $68.20 after hitting an intraday high of $69.94. That is the story of the day. An 18% gain in less than a month has stalled exactly at the $70 mark. The failure to hold above $70 matters because it shows the market is not yet willing to price a break higher without fresh evidence. XAG/USD is now sitting just below its 100-day simple moving average at $68.42, and the daily relative strength index has slipped below 50. In plain terms, that means short-term momentum has shifted from buying to caution. Look at the path. On the 18th of August, silver was around $65.26. By the 21st, it surged above $69. Then on the 24th it slid back below $68. The main catalyst was the US Treasury's promise to at least double buybacks of longer-dated government debt, potentially above $4 billion. That pledge revived what traders call the debasement trade, the idea that official intervention will weaken the dollar and support hard assets. Yet silver has not received the same defensive bid as gold. Gold ETFs pulled in 46.7 metric tons last week, while silver did not. The gold-to-silver ratio has widened to about 67.5, telling you this rally is led by gold's monetary appeal, not silver's industrial demand. For silver traders, this rejection is not necessarily bearish. After a near vertical move, a pause below a big round number is normal profit-taking. The key level is $68.42. A decisive close below that 100-day moving average could open a move back towards last week's $65.26 low. On the other side, a break back above $70 would need a clear catalyst. That catalyst arrives on Wednesday, the 26th of August, with the U.S. Personal Consumption Expenditures Price Index for July. This is the Federal Reserve's preferred measure of inflation. If the data comes in hot, the dollar and Treasury yields could rise, and silver would likely face more pressure. If it cools, the dollar could slip further and silver may finally clear $70. Beyond the PCE number, the bigger picture is a tug of war. The Silver Institute estimates a physical deficit of 46.3 million ounces this year, the sixth consecutive shortfall. That is a long-term support. But JP Morgan recently cut its 2026 average forecast from $84 to $70, and sees silver at $63 by the fourth quarter. The bank points to higher global rates and solar panel makers using less silver per panel. That could cut solar demand by 60 million ounces in 2026. Heraeus sees a wider range, from $55 to $105, with an average near $75. The message for the next 24 to 48 hours is simple. Inflation data will decide whether $70 becomes a floor or remains a ceiling. So the takeaway today is clear. Silver's 18% monthly surge has collided with the $70 level and lost the first round. The correction is calm for now, but the PCE release on Wednesday, the 26th of August, is the true test. Watch the $68.42 level for short-term direction and $70 for confirmation of a breakout. If you trade silver or simply follow hard assets, this is not a time to assume. It is a time to watch inflation data, the dollar index, and whether gold keeps pulling money away from silver. That single data point will likely set silver's tone for the rest of the week.